Hello everyone, hope you're doing well. Welcome to an episode of Monday Markets. Before we go into the charts, first thing to note is that the market is still being very headline driven and oriented. Specifically, at the time recording this, Genesis, which is one of the biggest lending firms in the space, paused all withdrawals and are trying to raise $1 billion to plug a hole or duration mismatch, and so there's some concerns there. And those concerns also extend to their parent company, which is Digital Currency Group, which is responsible for the GBTC trust, and there's some speculation that if they can't plug the hole on Genesis, are the trustees going to be forced to sell GBTC or the underlying Bitcoin there? And, again, look, the technicals don't matter too much, or the technicalities, I should say, when it comes to that. The broader premise that's important is that the market is still trying to price in the likelihood of further contagion, and it's still being very much sort of headline driven. So that's something worth being aware of as we enter this week. I think in a sort of very similar vein, that if the GBTC Genesis situation resolves quickly and favorably, and whether that's via raising money or some other mechanism, I think the market will naturally catch a bounce. That the move down in the past week has been that's definitely been a driver, certainly towards the end of last week. I think if that goes away, the market is likely to revert. And also the opposite is true, of course, whereby if the situation is worse than it seems and there's insolvency proceedings or whatever else, or if it continues to be unaddressed, that will probably be bad for the market. So a lot of sort of paradise for headline traders and people trying to price these things, less so for pure technicians. And there's also the issue that one of the what appears to be a sort of rogue actor or FTX hacker, which is currently how it's being titled on Etherscan, is selling large clips of ETH and trying to convert the ETH to BTC and basically off-ramp what appear to be stolen funds. And the market has been playing a game of cat and mouse and trying to front-run those flows and trade around them. So again, very messy, lots of extraneous factors coming in, so some context worth bearing in mind if you're going to be short-term trading this. The final bit of housekeeping is that something that will be very useful for those who enjoy Monday Markets. If you go over to my CryptoCred channel, I've uploaded in the past week 3 additional videos to the technical analysis series. There's one updated video on horizontal support resistance, there is one on entry triggers, and there's one on using a top-down approach. And these videos are very important if you care about understanding my framework. And in general, I think if you care about trading, they are good updates and also good standalone videos to the past content on that channel. And I think it'll just put everything into nice perspective when we talk about these things. So go check them out, and thank you for your support on this channel as well. Right, let's get into it. Not much has changed, unsurprisingly, on the Bitcoin front. If we're talking about the monthly time frame, we had a chance to establish support at previous cycle's high at 19k. That failed after several months of consolidation. The next monthly level is at 14k, which is this highest monthly close of 13.7, and then the sort of more visible shelf may be the pre-breakout structure around 11, 12k or thereabouts. So we have a breakdown from support, which is bearish, and the market hasn't yet reached support that's below us. So it's kind of in the middle of nowhere if you employ a kind of much higher time frame view. And also, generally speaking, as you know, if the market's going to be balanced for a while and then shift impulsively to imbalance, I'm generally not a trader who likes to fade that. I'll let the market unfold, maybe form a range or reach lower levels of support, whatever it may be. But I've got a very bad history in my early trading career of jumping into the market immediately after the market's basically broken through a big area, and that's just not served me very well. Thankfully, I learned that lesson fairly quickly. In 2018, when 6k broke down, I did buy some spot at sort of 4-something-k. I don't entirely remember, the exact trade, but the basic idea when the market was going through, 5.8, 5.5, 5k, and then sort of the mid 4,000s, my argument was, especially as an investor, there's nothing wrong with simply buying the reclaim of the level that broke down rather than trying to catch the knife on what looks to be a breakdown with follow through. I think that logic is similarly sort of applicable to current circumstances. If you don't want to do business at these lower levels or even in the midpoint, there's nothing wrong with saying we broke a big level, and if we reclaim it, that'll be a very good sign. I'll buy that. But if we don't, I'm just going to chill, wait, or be more passive. I think that's a completely reasonable view to take. So that's kind of the monthly time frame. If we look on the weekly time frame, these levels have a lot of confluence, as we've discussed. The multi-month break from balance is very visible on the weekly. Basically from the June lows until very recently, we moved sideways. That was a consolidation, and that consolidation is now broken down. So that sort of bearish trend continuation, basic stuff. Down, sideways, shows you where the flows are. In terms of the higher time frame levels that we marked on the monthly, how they look on other time frames, on the weekly, you can see there's some sort of candle and wick structure at 14k, although it's much better on the monthly than it was on the weekly, and the weekly sort of 12k level is very self-explanatory. If we extend how we map this from the monthly into, let's say, either this lowest close, this highest close, whatever, the same 12k area, it's a very sort of self-evident inflection point of highs and lows, highs, and this is the last kind of attempt at resistance before the bull market actually went full swing. So a huge area there, and I'm sure if we were to look on the volume profile and add that to our chart, you just see a big cluster of volume given how much time and how much time was spent trading there, essentially, unlike what we're sort of going through right now, which seems to be more inefficient price action than anything else. So something to bear in mind. Now, that presents, as I said, two basic scenarios. If you want to long the invalidation of the breakout, that's completely reasonable. Or if you want to do business at much cheaper and discounted higher time frame levels of support, where there is actual candle structure, that's also very reasonable. In terms of where the market is right now, if you wanted to make some sort of case for a bounce or look at some kind of lower time frame context, I think the market's been kind enough to carve out a range. And again, any kind of ideas generated by this range should be taken with a pinch of salt for the reasons mentioned previously. But one, it's still very much a kind of contagion headline driven market, and that's going to sort of drive flows more so than technicals. But two, this range isn't happening within the context of some higher time frame level. So this range is sort of happening in the middle of nowhere. If you were to have the confluence of you've got a daily range and the daily range is at support and that is taking place within sort of 12, 14k or some sort of higher time frame structure, then you have confluence to put more faith in that range and have a higher chance of it playing out. In this case, the range kind of has to be assessed on its own terms in the absence of that higher time frame confluence, which obviously makes it trickier. However, if we want to get some guidance as to how the market might trade this week, given it's not terribly likely that we get to those levels that I mentioned, sort of above 18, 19 or down to 12, 14, we have to kind of make do with what we've got, right? And I think what you can quite reasonably do is look at the lowest close of this entire leg down, and then look at the highest close on the bounce day and sort of see where the market is relative to those levels. One final thing I will do is also to outline the previous week's low, because we know that sometimes you can get good sort of trap setups or basically inflection points at previous week's high, previous week's low, previous day's high, previous day's low, and all those sorts of levels. So the range itself on the daily time frame comes out to the following. You've got 16k support, 16.7k resistance, and a 17k range high, with the previous week's low also coming in at 15.8k or thereabouts. Let's just make this a slightly more jovial color. You know what? Let's go all out here. Where's my pink? There we are. So in terms of where the market is right now within this range, and one final bit of context, if you look on the 4 hour, it's been equally good in terms of being anchored to visible levels. Ends up being the lowest close in the 4 hour, highest close in the 4 hour, and the midpoint has been a decent little inflection point here. So if I were to do business at this range, considering all the provisos I mentioned with the market flows more broadly and what's driving them, a reasonable setup would be, for example, a move below previous week's low, sort of spiking this high here, and then that breakdown, because it would on technical terms be a breakdown, if that were to fail and be accepted or move back inside the range, at the very least that provides you with some sort of invalidation, and then you could look for a move towards the range midpoint and the kind of double top stacked highs here, and potentially the range high if it develops appropriately. That's really the only setup that I can see within this context, because again, for me, at least for my swing strategy, if the market isn't at a high time frame level, 9 times out of 10 I will just simply kind of jump to another asset or close the screen or do whatever else, because that's sort of the basis of my swing strategy, is that there is high time frame structure to kind of use as the premise for the trades. That's currently not available, so we have to kind of make do with what we've got. The sort of very minimum to get me involved in this market, and even that sort of a coin toss to some extent, would be this type of range low failed breakdown trap setup. Now look, it doesn't have to get there. At the time of recording this, the market is already finding support at the sort of 16k handle. Maybe that's enough to give you a push into the sort of backtest area of 16.3, 16.7, whatever. That could well be the case. But given we're sort of in the middle of nowhere, so to speak, from a high time frame point of view, I definitely want to see a bit more confluence. Maybe that results in a missed trade. We just go up from here. That's completely fine. But for me, if I want to get induced into a long in these less than favorable, both fundamental and technical conditions, I'm going to need a slightly better setup. And for me, that slightly better setup would be a move below previous week's low that doesn't, early in the week, it would probably be better, that doesn't get accepted, and then if it does trade back within the range, usual kind of entry triggers apply, and I can say that now because there's a video on the channel, the CryptoCred channel, about entry triggers. Usual stuff is how you would trade a failed breakdown or a range low reclaim would kick in, and I'd look for a move higher at the very least towards the 16.4 handle for like a day trade, and maybe even towards the range midpoint if appropriate, and then it's kind of on one level at a time. If this doesn't cause a pivot, maybe there's an opportunity to go to the range high. And again, unfortunately or fortunately, I think a lot of that is going to be catalyst and news driven, but in terms of planning on acting on that, you still have to look at a chart, at least in my system. So that's kind of it. If there's going to be any type of bounce, for me, it has to be generated around this kind of 16k, 15.8k area, and ideally with some sort of trap to actually set the wheels in motion, so to speak. And if that doesn't happen, that's fine. There's nothing wrong with if we're forced to be patient and wait for the market to sort of sort itself out, consolidate before getting to those higher time frame levels, that's also good. But this video would be very short if I were just to say monthly isn't at support, weekly isn't really at support, daily isn't either. It's is at a dodgy range, and that's it. I'm not going to do anything else. So hopefully this kind of at least low time frame color commentary is helpful. So that's kind of the levels that to keep an eye on. Again, 16k range low, 15.8 is the previous week's low, 16.7, 16.8 is the range midpoint, and 17.6 range high. That's sort of I think a decent roadmap, absent the high time frame levels, to be aware of for Bitcoin this week. As far as ETH goes, still kind of structurally I'm having some issues with this thing, given that on the weekly Bitcoin is decisively broken down through its range low and is continuing towards higher time frame levels, whereas ETH is attempting to make some sort of higher low or equal low previous to the price action in June. So there is some significant structural divergence between Bitcoin and ETH, and that's always confusing. Even if it's not confusing, you always have to sort of consider, is the fact that these two majors diverging, is one of them indicative of relative strength, or is it just lag? Because historically in kind of Bitcoin market cycle corrections, what we've seen is Bitcoin corrects hard, ETH corrects even harder, and then ETH usually outperforms in the bull market as well, and that's been very standard. Maybe the flows have shifted and quote unquote this time is different, but it's not entirely clear to me that that's the case. So that sort of gives me some pause at the very least. In terms of the weekly levels that we are dealing with, or the high time frame levels, why 1.1k is so important? Yes, it is the previous weekly range low where the market's trying to carve out some sort of base, but it's also the monthly highest close of the last bull market, sort of I guess to some extent the 14k Bitcoin equivalent, like purely in terms of structure, just like the highest close of a large impulse, and that's sort of around where the market is trading right now. If we look at that on the weekly, you could see it pierces through this entire consolidation here, and you could quite reasonably just box out the pre-breakout structure between 1.1k. Well, pretty much at 1.1k, right? That sort of ends up being your structure. Now, to me personally, as I said last week, I'm not just comfortable blindly punting ETH if I don't have any type of high time frame structure on BTC. Like if you think ETH is going to outperform, and we'll look at ETH BTC in a moment, you could just wait for Bitcoin to give you a signal and punt ETH instead. I think that's fine. I think intraday, if you get very clear setups across BTC and ETH and you kind of take your pick on which one is the better setup, that's also fine. But establishing like high conviction swing positions, which is kind of what I'm looking for generally speaking, when I see this kind of structural divergence and an absence of high time frame support on BTC USD, it's just kind of not enough there for me, right? So this is kind of definitely one area worth paying attention to. In terms of trades around it, there are a couple of issues. One is, in a sort of twisted way, it would almost be easier if the market were to break down from here, because then the catch up, whether it's lagging or catching up, that question would be answered, and it would also mean that we get to trade some clearer structures, or at least set expectations for where the market might go. Really for ETH, there are two areas on the high time frame where stuff aligns. One is around this sort of 600 to 800 handle, some previous cycles price action there. That kind of has to hold, because the alternative, of course, is basically another halving and taking price to the next volume cluster closer to 400 to 500, and again, one level at a time type of thing, should that come to fruition. If we forget the Duma levels for a moment and look at where the market is right now, it's certainly trying to carve out a higher low based on this previous consolidation. But the issue is, first of all, this weekly close is like whatever, it's not doing a terribly compelling job. And the other thing is, in terms of what's above us, the market reacted, unfortunately, very well to resistance that we talked about last week in the form of the lowest close at 1.2k, something like that. So you've got bearish weekly market structure going on. If you throw up a line chart, you can see the lower highs and lower lows going on, right? Sort of cursory stuff. You've got a high, a low, a lower high, a lower low, a lower high, and this looks to be a lower low. So weekly market structure is still like very decisively bearish, and so I'm not exactly rushing to get involved at this range low, at the very least not without Bitcoin type of confluence. The only setup that comes to mind, if it is monthly support, this kind of 1.1k area, previous range low, for me the only way I could potentially get involved in this on any time frame is if we mark out the bottom of that consolidation, which comes out at 1074. You can see that a couple of weeks ago ago, we had a very deep wick that more or less kind of tested that level and closed above it, and now the market is sort of trading towards it as well. So similar to BTC, in the absence of kind of the market trading at compelling high time frame structure, the very least that I need to get involved is some sort of attempt at a trap or failed breakdown type of setup. So on this occasion, if we look at what that might look like for ETH USD, it would be your classic sort of failed breakdown entry trigger or price action, where if the market were to move through these lows and the breakout, instead of just accelerating and puking, it moves in and then doesn't actually roll over and ends up in some sort of reclaim. That in itself would be sufficient for an intermediate or fairly kind of medium time frame trade. And the target for that would at the very least be this 1.2k level, the origin of the breakdown, and sort of anything within the former range high, I think, which is again sort of this 1.2 to 1.1 to 1.2k handle. That would be kind of the logical for me take profit for that trade. So you can kind of see that despite the structural divergences, BTC and ETH are in very similar spots, like sort of not at the best structures. And if you want me to get involved in them, I need to see a very good, slightly lower time frame setup in the form of a failed breakdown. So for ETH, that failed breakdown would have to form below and then back above 1070s or 1.1k. For BTC, it's sort of a very similar handle with the previous week's low at 15.8 and a stab through that and a reclaim of the range low, but those trades aren't currently available. It's just something on my radar that I'm keeping in mind. So that's really the only thing from a bullish side that could get me interested. It is an important level, and it's not out of the question that the market can set up some sort of trap through this confluent swing low and higher time frame support, but that's one of those where you have to just kind of be there as it sets up and trade it like a standard failed breakdown if it gives it to you. And again, you'll notice the profit taking is very conservative on this, no crazy swing targets. It would be the case that the market didn't break support, probably going to go up if that's the case, and the next resistance is, pretty much overhead given how the price action's been unfolding. So that's really the only thing on my radar for ETH. I want to see some resolution on this weekly time frame as to how it's going to work out. I'm open-minded to playing a trap setup if it sets up appropriately, but I'm also again acutely aware that there are very many sort of fundamental and news drivers for this thing, more so than ever before, both the ETH hacker and the whole Genesis GBTC situation, that unless the setup is really good, you're going to have a hard time getting me excited about it. On the ETH BTC front, this thing's been struggling. It hasn't really moved much in the preceding months, but you're starting to see some hints of where the market structure might go. You've got, this low made a lower low. This rally seems to be making a lower high. So market structure, looks to be weak at the moment. There's a good chance this just stays as chop and doesn't go anywhere. If it does start to accelerate and especially make a lower low through the 67 handle, I think if we take heed of where this range came from, it was some version of the lowest close at sort of the 06, the highest close at the 07, 08, and so if the range high is going to provide a rejection, you'd expect a move to the range low, and maybe there's like some sort of relative value bounce there around, under 0.06. Bigger picture, if we start to see, if the catch-up trade that I mentioned, where if Bitcoin's going to crap itself and ETH overperforms to the downside, very weird phrase to use, but if that type of classical cyclical correction scenario plays out, I think the larger value area for ETH is around 0.04. That was the pre kind of crazy bull market breakout in the ETH outperformance period. You can see there's just a lot of trading done historically around this price handle. It was the range high for a while. This extension wasn't good enough initially. You've got a bunch of clustered price action as well. So, if there's any type of relative value punt to be had for ETH on a bigger rotation or on a cyclical correction, I think the 0.04 handle is definitely a turning point. But again, with so much uncertainty, I think one level at a time is best. If ETH BTC continues to be weak, it's the 0.05, 0.06 type of range low that is much more instructive in that regard. As the market's shown weakness, some altcoins have continued to struggle. I mean, BNB is still floating lower after this, weekly engulfing. If we look on the daily time frame, I mentioned that there was this sort of support structure around the 260s handle. And, I wasn't terribly keen on making the case for rebuying it, given how many tests it's had and the given the move that's coming into the level, and that seems to be unfolding at the moment in the form of a breakdown. I think again, same logic applies. Maybe we get some good news and these breakdowns don't stick, and that would definitely be a tradable event. So for BNB, if this is our range low, we can quite reasonably map out a range high, around the 300 handle or thereabouts. You could overlay these levels a little bit, and then say, if this is going to be a good week and a lot of these fears about further contagion get allayed, even if the market provides a short-term kind of reversion or bounce, there's a world in which this breakdown, however low it goes, doesn't stick. And in a similar vein, any reclaim of the 260s handle, you can swing it towards the 280s range midpoint, and then the 300 handle as a retest of resistance. So you can start to see a prevailing theme here that there's a lot of uncertainty in the market, a bunch of stuff which is a coin toss at best in terms of outcomes, and the market's just very sensitive to news still. And I think, if it unfolds favorably, a lot of the breakdowns and breakdown attempts that we're seeing in the market right now will simply unfold as standard failed breakdown range plays, and if not, then it's best to sit out and wait for those fresh levels. But given the high degree of uncertainty, and for a lot of these, the absence of high time frame technical structure, especially for the majors, that is to say BTC and ETH, I don't think it's unreasonable to have like a high bar to get involved in the market, and I don't think wanting to see good evidence of a failed breakdown is particularly unreasonable. I'd want to see that under ordinary circumstances, let alone the ones we're dealing with right now. Other levels, I can actually bring up my marked levels chart. I think I marked up Dogecoin at some previous point. So here we go. For Doge, the weekly close a lot of my levels, or actually my 2 levels, are anchored on this blow off top consolidation, and on the weekly time frame it sort of closed back within the previous structure at around 80 cents or thereabouts. So that's, you could also just add this previous swing point as some extra confluence. 79 cents, 81 cents, 80 cents round number. I think if this thing is going to fold over, and it never really got to testing the bottom of that range, if we see market weakness, and this chart is a bit messy, admittedly, but for example, from a standard market structure point of view, if this thing were to make let me just draw this slightly neatly. You get a lower low and then a lower high rally into this resistance, and you get the appropriate entry trigger. That might be worth punting to basically fill in the rest of this and see what's hanging around at the lows. So any Doge weakness at 80 cents with the appropriate entry trigger could be the play if the market sort of unfolds bearishly, for lack of a better term. Matic is less interesting. My levels are far away, and it didn't quite break down from its local level of support. There was a good turnaround at that sort of $12, $16 resistance, but unlike a couple of others alts, it's still hanging on to its range low, so nothing there. Sol, as an update, we talked about resistance at $14, $15. That's basically unfolding at the moment. Nothing to write home about there. Not particularly interested in playing any sort of failed breakdown or whatever else, again, because pure absence of structure at this point. If you look on the weekly time frame, this is kind of very technical. Level, close below, retest, and now sort of moving lower. There is a world in which, there's some market structure play there, where if you get a higher high, maybe that ends up in a weekly reclaim of 14 and you go higher. But look, if you're going to be playing strength in this market, it's probably best to go either for the majors or the coins which don't have a ton of supply, a ton of contagion, all this other stuff. There is a world in which you can find out, especially on these legs for altcoins, which ones had the highest sort of relative corresponding increase in open interests, like the most shorted ones, and then look to play larger liquidation-driven reversions on those. I think that's reasonable. But for me, at least, the likelihood of me chasing those types of trades is pretty low, and I'll probably stick to the names that I like and know how to trade if I'm going to make that play. But generally speaking, if you think that the market is mispricing the GBTC stuff, or if you've got quick fingers to act if the Genesis Contagion cloud blows over, you can simply look at which alts, based on open interest, price action, funding, etc., had some really aggressive bearish participation on their most recent legs, and get ready to basically punt those on a short-term reversion should the fundamentals / news get better. AVAX hitting its range low. This is on the monthly time frame, so I think over the next week or two we'll get some idea of how this might resolve. So to be decided. This isn't the right environment for a kind of first test, best test type of thing, but there is some structure here, so that's sort of why it's on my watch list for the time being. Fast move into it. Maybe we see something form in the coming days and weeks. Again, it's a monthly level. I can definitely spend some time there, but again, not terribly interested in this. And really, just for the altcoins, for the reasons stated, there's so much other stuff that's more important when it comes to driving these prices and driving these flows. If I'm going to punt here or punt in the market in general, already I've set a high bar given Bitcoin is in the middle of nowhere and ETH is kind of showing divergent structure, and I'd need to see A+ lower time frame, like sort of daily 4-hour setups on those to even consider getting involved. So when it comes to altcoins, they're even lower down on that hierarchy in terms of what would get me particularly interested in them. And a lot of them kind of look like this, where the market appears to be making an effort either to sort of poke the lows or break down from the lows, depending on how you delineate them. So not terribly interesting there. I really think if you want to be productive this week, the primary focus should be on the BTC and ETH levels that are more or less being traded right now, and also just being very acutely aware of the news and whatever releases we get from Genesis and GBTC. Like ordinarily I wouldn't put this much weight on news, but I think the most recent leg down was definitely sort of Genesis and GBTC driven, which is DCG driven more broadly, given they own both entities. So it's like a sort of has a disproportionately high impact in my decision making. So that's this isn't the type of environment I think where you want to just leave a limit order in the market and then go chill and not see what's going on. This is one worth, this is big enough to the ecosystem to kind of command your attention, in my opinion. As far as legacy goes, not too many changes. You'll recall that we had this range midpoint in the S&P at about 39.80 based on this weekly range where we had, let me just zoom in as a reminder as to where our anchors come from. We had the lowest close, range low support at 36s, highest close, range high resistance at 42.43s, and that gave us a range midpoint of 39.80s around the 4K handle. The market's kind of slowing down there, and you could quite reasonably, as I said, just box out this whole consolidation as a larger resistance within the mean of the range. That's where you're getting a bit of a slowdown. I think what would be bearish and therefore probably put a bit more pressure on crypto would be if this market were to actually just pull back more meaningfully from the range midpoint and specifically lose this 3900 level, because that's a big level. Like even if we extend it and kind of zoom out to see what kind of structure it is, you can kind of see previous highs and lows are stacked up there, and then more recent price action has been very sensitive to it. It was the last resistance before this crazy big up week as well, and even on the daily time frame, if we just clean this up a little bit, let me do that very quickly. Even your eye test is immediately drawn to this 3900 level. Support, resistance, support, resistance, resistance, support. That's like a big pivot. And we know now that while it's been a big pivot before, the context in this juncture is that there is some higher time frame resistance that could potentially be pushing this chart. So I think any move below 3900 that isn't a deviation or isn't short-lived, so basically any sub 3900 acceptance, would start to look pretty bad losing that type of big pivot. I'd be looking for at least a fill of the engulfing candle breakout, and then we'd have to see whether the lows are vulnerable at that point. So in terms of legacy levels, I really think if you care about macro, which I do, and I think you should as well, 3900s is a decent sort of pivot to view it. The final point I've got is another pressure on the crypto market has been incredible dollar strength. For a while, we caught a bit of a break with that, obviously because of the FTX stuff. Our markets were nuking, but I think, as I've argued before, dollar looked weak, equities rallied. We would have been at much higher prices in crypto under ordinary circumstances, maybe range highs, maybe range high breakouts, whatever it may be. But one of the drivers for risk asset strength was dollar weakness, and the dollar's now reached an important inflection point, which has responded well to since last time. I don't actually remember if we spoke about this, but in any case, there's this pre-bull market or pre-breakout consolidation in the dollar around the 105, 106 handle, and the market sort of broke out from that, made its all-time high, and then crashed back into it, and we're currently catching a bid off of that level. It closed very nicely, and it's sort of creeping back up higher. Now, that doesn't necessarily mean it goes and makes all-time highs next. Maybe some consolidation or range within this type of area makes sense, but the broader premise is, this is how we look with dollar weakness. And so if dollar actually starts to be strong, or even just like range at higher levels, and basically any price action that doesn't look super downtrendy, risk assets would take a hit from that kind of repricing, and crypto would likely still be affected. So some other stuff to consider. That's all from me. I hope this is helpful. As I said, I would love for you to go watch the CryptoCred videos, the 3 I've uploaded in the last week about levels, entry triggers, and the top-down approach. I think it'll really contextualize how I think a lot about these things, and hopefully make you a better trader as well. As always, thank you for the support on the channel. We appreciate having you. Thank you for all your comments. Leave a like on this one if you enjoyed it. Subscribe, share it, do whatever. And I'll see you next week. Take care and goodbye.